In today's episode, I'm going to give you an in-depth guide into one of my favorite strategies. This is the MACD trade strategy. It's a great one for beginner traders because the goal is to lock up profit within a 30-minute window. The idea is that there's a small period of time when the price action is the cleanest, and that's the time when you have to be as aggressive as possible to lock up your gains and not overstay your welcome. Right now, we're in an incredibly hot market. And although some of you may watch this weeks from now, months from now, or even years from now, when the market is different, trading the MACD strategy for me has been like my bread and butter. It has been a go-to strategy through bull markets and bear markets alike. So let's go ahead and jump into the screen share. And I'm going to pull up my slide deck here for this class. And I want to highlight my profit loss from today. This is real money, and what you can see here is that I traded about 12 different stocks and locked up a total of $45,654.02. This right here is my biggest green day of the year, and that's why I wanted to celebrate it by teaching you guys this special class. And what I can say is that I feel like a lot of you guys right now are overcomplicating it. We're seeing some really nice, clean moves, but you know what I'm seeing a lot of you guys do? I'm seeing you undertrade the beginning of the move and then overtrade the backside and manage to find yourself red on a stock up 500%. How many of you have experienced that in the last week? Well, just in the last 2 days, we've had 3 stocks that went up over 600%. So these are some really big windows, and we got to really think carefully about how we're going to trade when we have this kind of price action. Now, whether you trade Forex currencies, you trade cryptocurrencies, you trade futures, or you're trading stock like I am, we focus as active traders on trading volatility, right? We don't make money buying something at 5 and selling it a few minutes later at 5. We want to buy something at 5 and we would love to sell it up here at 10. Now, getting a 100% return in 5 or 10 minutes, that might not seem very likely. But when we start going over some of the charts and some of the price action that we've seen just today, you will realize that there are moments in the market where we see extreme volatility and we see really big emotions. There's no question that many of you are familiar with GameStop and the epic short squeeze that took place on that stock. Well, everything that we're seeing right now, it's kind of on a smaller scale from GameStop, but it's that similar degree of emotion in the market. Right now, there's a lot of excitement. There's a bit of fear, the fear of missing out, and there's a bit of greed, people wanting to capitalize on the next stock that moves higher. And so learning how to be a successful trader requires an ability to read the sentiment that is in the market right now. I think I did a great job of that today. The stock that I made the most on was AZTR, and this stock actually went up over 600% today. It was our leading percentage gapper, our leading percentage gainer. So let's go ahead and jump into the full screen here. We're going to start this class. Those of you guys who are tuning in to this class, this is perhaps one of the first you've ever watched me teach. My name is Ross Cameron. I'm a full-time trader. I've been doing this for more than a decade. In fact, I created this YouTube channel in 2013, 11 years ago is when I started uploading content here. So if you enjoy episodes about trading strategy like this, I hope you hit that thumbs up and I hope you subscribe to the channel. And what I'm going to do to correspond with this class is I'm going to give you a PDF download. It's going to be linked in the top of the comments and in the description where you can actually download my small account strategy as a PDF. Download it, print it out, and start practicing it on your own. But as always, I'm going to remind you right now that my results are not typical. Trading is risky, and you should always practice in a simulator before you put real money on the line. I wish I had done that when I got started, but like a lot of beginner traders, I jumped in to the deep end and I ended up losing hard-earned money. So don't make that mistake. Okay, so we're talking about a 30-minute scalping strategy and a 30-minute profit window. This is a perfect example here on AZTR from today. So this is the stock in the background. You can see that this is the chart where it went from about $2 a share all the way up to $12 a share. And I locked up just under $30,000 of profit. But you know what? There were windows when this stock was clean and this was the right stock to trade and it was the right time to trade it. The windows were when the MACD was positive. So I've highlighted them in blue. This window right here was the first, and this window right here was the second. On the first window right here, I did well. In fact, I did quite well. I made about $18,000 on this profit in this window right here. So this is our first 30-minute profit window. I locked up 18,000, but I gave back a little bit off the top. We went sideways, and then through this window here, I scaled up, and this is how I got myself to up $30,000 on AZTR. So these were our two windows where I felt comfortable trading, and it was based on the MACD. Okay, so let's get into a little bit more detail about what we're going to cover in today's class. So we're going to talk about the definition of MACD. I'm going to show you how to configure MACD on your charts. I'm going to share with you my MACD trading strategy. I'm going to tell you the tools that are required to trade this strategy side by side with me. I'm going to tell you the skills that you need to learn, and I'm going to share with you at the end of this episode some recommended reading, a recommended reading list for those that want to keep learning. Okay, so let's start with number one. What is MACD? MACD is a technical indicator used by active traders. So essentially, most active traders like you and I are going to be performing technical analysis. Technical analysis means we're reading candlestick charts. So I'll pull up my candlestick charts here in the background. So we're reading candlestick charts. We're analyzing the different patterns, the shapes of these individual candles right here. And we use different technical indicators to help us interpret price action. Now, this is, of course, in contrast to big investors such as a Warren Buffett. Someone like Warren Buffett is not performing technical analysis. He's going to be performing fundamental analysis. So what he's doing in contrast is he might see a stock like AZTR and he says, AZTR, if I want to buy this entire company today, what am I buying? What am I getting? And he's going to pull up the SEC filings on AZTR, and he's going to look at their quarterly earnings and their annual earnings reports, and he's going to try to find out what's the value of this company and how does that compare to the current price that it's trading at. And so he's, of course, a value investor. There's many value investors like him. We've got Bill Graham and Peter Lynch. This is a book by Peter Lynch. He was the head of the Magellan Fund at Fidelity Investments during the 90s and really incredible value investor. I've got another book by Benjamin Graham over here. But in any case, the concept of value investing is to try to find something that is really trading far below its actual book value. And as an active trader, you and I, we don't end up focusing a lot on that because while fundamentals matter in the long run, what we know is in the short term, prices can become very disconnected from fundamentals, both to the upside and the downside. In fact, we saw both with GameStop. We initially saw that it was trading at a fraction of what was really its fair market value back in 2019 and 2020 before the short squeeze began. At that time, GameStop was doing $6 billion a year of gross sales, and the market cap valuation of the company was $250 million. They're doing billions of dollars a year and they're only valued at 250 million, which means if you bought the whole company, you could have bought it for 250 million. And then now at this point, it's trading at a multiple of, well, it's trading at, I think it's doing about $5 billion of revenue, but the market cap is now like 11 billion. So now it's kind of flipped to the opposite side. It's very overbought. So for me, what I'm doing each day is I'm looking for stocks that have the potential to show us these really big ranges and give us these really big moves. Because as I said, I don't make money buying something that's going sideways. There's a million stocks in the market, not literally, but there's thousands of stocks in the market that are going sideways on any given day. There's only a handful that are doing something really special. So as an active trader, I'm going to use technical analysis to help me better understand the context of the current price. Because if you said, Ross, I found this stock that looks really good and it's $3 a share, I would say, okay, well, give me the context of that. Is $3 the all-time high of this stock, or is it the low of the last 52 weeks, right? Put that price in context. And the chart is what does that. The chart is what gives me the context. So MACD, it stands for Moving Average Convergence Divergence Indicator right here. MACD, it's an acronym. And it's an oscillating indicator that's designed to visually to give a visual communication of changes in trend. So what that means is when we actually look at it on a chart, and I'll pop my chart up right here, the MACD I have down here at the bottom. So this is MACD right down here. And you can see how it oscillates, which means it's going up and then back down and then back up and then back down and then back up and then back down. And so when it's trading up at these extreme levels here, the stock is going to be very extended. And when it's very weak, the stock is going to be pulling back. So one of the things that a lot of traders will focus on are these shifts from extremes. So from extremely overbought to oversold, overbought to oversold, and looking for those curls off the low. And what's kind of interesting is that to a certain extent, even without looking at the candlestick chart, you can kind of understand what's happening with the candlestick chart when you get good at reading the MACD. You can clearly see here that we had an initial move up, a pullback, and that we moved higher. And then you can see that weakness came in and we came down quite a bit. Now, this would actually make it look like we came down lower than the initial move, and that's not correct. So it's not to scale, but it does show these large shifts in sentiment, which is exactly what we want to see. So trading when the MACD is positive is far, far easier for me than trading when it's negative. And this is like one of the simplest things that you can check as a beginner trader. So if you're pulling up a chart and you're thinking, oh, this is something I might want to trade, one of the first things I would do is check the MACD. So right here, for instance, if I pulled up this chart, I'd be able to clearly see that the stock is selling off. But unfortunately, in the last couple of weeks, especially the last few trading days, a lot of traders have looked at this and have thought, you know what? It's a strong stock, generally speaking. This is my opportunity to buy a dip. Buy it when it's pulling back for a curl back up. And what I would argue is that you are over trading the backside of the move. So something I want to help you understand is, and just important concepts to know. So important concepts to know. So we've already covered technical analysis versus fundamental analysis. Now I want to talk about front side versus back side. All right. Now, I don't like to trade the backside. Trading the backside is BS. It's backside. We don't like the backside. Why is it? Well, what I have found is that when you're trading the front side of the move, that's when you get the most action. Okay, so what is the front side? The front side is the beginning of the move as the stock is stair-stepping up. Once it begins to go sideways, we may be getting ready to stair-step down. So stocks essentially, they trend. And so I'm going to erase this. This is from a class yesterday that I taught. So when the price is moving up like this, we're trending up. And when the price is going sideways like this, of course, we're trending sideways. And when the price starts stair-stepping down, we're trending down. So there are two different styles of trading. You can either be a trend trader, which is also known as a momentum trader, a Momo trader, or, so this A, or B, you could be a counter trend trader, which is also known as someone who's always angry and frustrated and has tears running down their face. And the reason is because trading against the trend is really hard. It's so much easier just to trade with the trend than to trade against it. When something is trending up and it's stair-stepping up, you get this predictable price action. And what you look for is to buy these pullbacks and to ride the next leg up. Buy the pullback, ride the next leg up, ride the next leg up. And then once we finally get the first candle that makes a new low and we step down, now right here, the trend has changed and we step off. Traders who are trying to trade the backside of the move here to the upside, looking for the reversal, are going to struggle. Traders who are shorting, who are looking for the reversal coming back down, are also going to struggle because these can just continue trending higher and higher and higher. And it's just a lot more difficult for a beginner to be able to understand when the trend is exhausted and it's going to roll over. What's more common is that beginner traders try to predict the reversal of trend, buying something that's really weak, thinking it's going to turn around. and it just goes lower and lower and lower. And the problem with this is that the lower it goes, the more they feel like it's a good deal to add more shares because the price is even lower. And they get into the habit of averaging down. So now the stock or whatever you're trading is going lower. They're adding more shares, they're adding more shares, they're adding more shares. And sometimes we end up seeing such volatility that we'll see something go up 100% and then come all the way back down to where it was beforehand. So it's like trying to trade as it's trading, coming back down, expecting it to curl again is not the right move. So for me, I'm a momentum trader. All right. I don't want to be trading against the trend. So as a momentum trader, I want to be trading when we're stair-stepping up like this. Now this area here, we start to go sideways. I don't like to trade during this sideways consolidation because ultimately, even if you have a decent range from the bottom of consolidation to the top, you're still more or less going sideways. And when you're going sideways, you know what's going to decline? Volume. Volume declines because traders aren't really interested in trading something just going sideways. They want to be trading something that's moving quickly. So the problem is you get in here and then you have a hard time getting out if you need to because the volume has declined. So then finally we break to the upside and this is where we're back in play. The MACD was positive, it went negative and then comes back to positive and we squeeze back up right here. So let's pull our slide deck back up here for a second. So MACD technical indicator, moving average convergence divergence indicator, it's an oscillator. The crossovers are significant and trading when MACD is positive is a lot easier for me than trading when it's negative. So just as an initial gut check, if the MACD is negative, which is from right here to here, I'm not going to trade it. So let me just full screen this here. So when I say positive or negative, this blue line right here is called the MACD. And the orange line is called the signal line. Let's go ahead and jump to the next slide, and I'm going to show you how to configure this on your charts. Okay, so I didn't mean to jump out of that, but that's fine. So the way to configure MACD on your charts, you can go to Add Indicators, and you'll be able to do this pretty much with almost any trading software. Almost every platform offers MACD. It's a standard indicator that's been around for a long time. So in this platform, there's this little FX button, and then I can type in MACD, and I could click on it right there. Now, once you click on it, you want to make sure you configure it correctly. So I'm going to double click this, but I could also click on the little settings widget right here. And I want to check the inputs. The fast length is 12. The slow length is 26. The source is the close, and the signal length is 9. All right, so these are our settings right here for the MACD. Now, let me just make sure. I don't think I think that was, oh, and then the one other thing that I was going to note is that you'll see that this is on my 1 minute time frame. So to get you oriented with what you're looking at here, this platform is called Day Trade Dash. This is the software that I've built out over the last 7-8 years with my own development team. And it has charts, scanners, newsfeed, and it has our chat rooms and my broadcast at Warrior Trading. So the way I lay it out is I have 4 charts, 1, 2, 3, 4, and they're all for the same stock. So this is a 10-second chart. This is a 1 minute chart. This is a 5 minute chart. And this is the daily chart. This right here is my little news window where I can see what the breaking news is on a stock. So I have it set up like this, and I actually only have the MACD on my 1 minute time frame. The reason it's only on my 1 minute time frame is because I am primarily a 1 minute trader. But I call this the 30-minute profit window because once the MACD opens right here, which was at about 8:46, it stayed open for about 30 minutes. The reason I figure 30 minutes is because as part of my strategy, and I'll show this to you as we get a little bit further into the class, but just to give you sort of a brief demonstration to help you understand why I choose this. When a stock starts breaking out, we'll usually get 3, 4, maybe 5 green candles going up, and then we'll get a couple candles of pullback like this. So each of these are 1 minute candles. Now we're 1, 2, 3, 4, 5, 6, 7, 8 minutes into the move. So first entry could be down here. And now we're 10, 15 minutes into the move. Second pullback is right here. And then we're pushing up here. And then usually what we find is the third pullback ends up being a false breakout. And I'm not just saying that because I'm running out of the whiteboard. It's actually true. So usually I find that I do the best trading the first pullback right here and the second pullback right here and not trading it up here. And this is going to correspond with right here is where the MACD opens. And then right about here is going to be kind of where it closes. So this is the window when it's open from here to here. And generally for most stocks, we have a window of, about 30 minutes when we've got some really clean trading. Look, with some stocks, it's a little longer. With some stocks, it's a little shorter, but it's usually about a 30-minute window. And that's the window to try to make as much money as you can before you get that first MACD crossover. Once you get that first MACD crossover, for a lot of stocks, that can be it. You got one window, it's crossing over, and then from that point forward, the stock is choppy, it's not clean, it's not easy to trade. Now, as the case was with AZTR, we got a second window that opened up. So it did make this first 200% move, and then it goes sideways, and then we get the second breakout here, which was actually even bigger, which is how I was able to have such a great day. But then after that window closed, we really didn't get another opportunity. Now, you could say, what about back here? Technically, the MACD went positive, and you are correct. It's a very, very good observation. However, let's go back over here. We want to trade the front side of the move. So the front side of the move means the stock should be making new highs around the time when we're trading it. So if we were trading right here, this is not going to be making new highs from this level down here. So in order for it to be making new highs, of course, it has to be way up here. So even if the MACD goes positive, but we're not making new highs, I would say it's no good. So as the case turned out for this, I initially thought it was possible that this was the top of the front side of the move. But during this period of consolidation, we were holding in approximately the top, 10, 15% of the entire move. Let's say that's 15% right there. So when a stock is consolidating at the very top of its range, that is usually bullish for a breakout to the next level. And it's actually what we would call a bull flag that's forming. Now, if you haven't already watched my episode on how to trade bull flags, you're welcome to check that out after this episode. It's another really good full-length class that's right here on YouTube. So up here, the problem was this is the next leg up. And if we measure it here from this low down here up to this high up here, we've got to move from $5 to 12, but we pulled back all the way to 7. Right? So we're down at like the 30% mark. We needed to at least hold the 50% line, and we pulled back too much. Now, some traders will use an actual retracement measurement tape to see what percentage is pulled back. I don't get that detailed on it. This is, for me, is close enough, but I can visually see that we've pulled back too much. So although we got the crossover down here, the stock at this point was it was not set up to make new highs. And I felt like we were, in fact, on the backside of the move. Now, the second stock that I traded quite well today was SLRX. So let's pull that up really quickly just to compare these two charts. So this is a stock that gave us a 30-minute profit window right around here. And look at the incredible volume. And that was it. That was the window. It was right here. And then once we got that MACD crossover right here, it just pulled back. Now, the way a MACD crossover occurs, and I suppose to better explain how this technical indicator functions, the moving average convergence divergence indicator is measuring the distance between moving averages. So if we looked at, we'll zoom in here on this. If you look at these moving averages right here, and we go into the settings here, it has two. It's got the fast length, which is the 12, and the slow length, which is the 26. So these are the two moving averages that it's using. And it's measuring whether these moving averages, are moving apart, which means they're diverging. And if they're diverging, it's because the fast moving average is pulling away from the slow moving average. And that happens when the price makes a rapid move higher. So down here, we could see, and I'll just make this, let's see, we'll go change visibility. I'm just going to make this I want to just make it bold for you for a second. So we're going to make this one bold, and then we're going to make this one bold just to really help them pop. So there we go. All right, so look at these two indicators. These are both moving averages. See how they're close together right here? So right here, they would be converged, right? So converging, moving together, diverging, moving apart. And the space between them got bigger, and then it got a little tighter right here because we went sideways, and you can see it got a little tighter, and then it pulls apart, and this was the biggest sort of difference right in there as the stock went from $4 to $6.50. So we get that big divergence right there. And then all of a sudden the price starts to come back down. And as the price comes back down, that fast moving average, the fast moving average is taking the average price over the last 12 periods. So when the price starts coming down, that moving average starts coming down as well. The slow moving average is slower to move. So what ends up happening is the fast one gets closer to the slow one and they converge. So divergence, convergence. And when they cross over right there, that is a big, big indicator that the trend has shifted. So we got this crossover identifies a little bit sooner just because of the way the MACD calculates, which is fine. But that's the spot where I pay close attention. We got a crossover. So now the beginning of that window is closed. And as the price goes, pulls back in this area, there's always a question of, will we get another leg higher? And in this case, again, if we look at the percentage of this move from here up to here, we were holding about the 50% mark until right here when we broke down. So when we broke down right there, we were previously holding this level. If you drew an ascending support line right around here, we were kind of holding there. We had a little bit of a descending resistance line sort of right in here. And then we broke below it on this candle. High volume selling, because this was the moment where people said, you know what? I got to bail out. I'm out. This is not going to go. So for me, I would have been out much sooner because of the MACD crossover that happened way back here. So I traded the front side of this move as aggressively as I could. I made $8,553 on it, which was decent. But considering it went from $2 to $7, it wasn't really that huge of a move or a huge of a gain for me. But nonetheless, it was a solid green trade. Okay, so now you also have a good understanding of what the MACD is communicating. So when the price is moving fast, the MACD is moving up. And when the price begins to slow down and even retrace, the MACD will also start to turn against, and then eventually we get the actual crossover. All right, so let's talk about my MACD trading strategy, how I approach actually executing these trades. So my goal is, as always, to focus on aggressively trading the front side of the move before we have that first MACD crossover, because I don't know whether or not we're going to get a second leg to the upside. In a really hot market like what we had today, we did get that on a couple of stocks, but not on all of them. It was only a few of them that really gave us that second leg higher. And there were a number of others that just gave us that one first move. And what I've seen a lot of traders do is they kind of trade this too conservatively because they're like, oh, it's extended. I don't know. I'm not really sure. But these are all really clean pullbacks. And then in this area, they end up continuing to trade it, hoping it kind of rallies back up. But now you're trading the backside of the move. Like it's kind of, MACD's crossed over. We're moving in the wrong direction. This isn't what I want to see. Okay. So step one for me is I need to find a stock that's volatile and that's moving. So I use stock scanners to help me find those stocks. Step two is performing some basic fundamental analysis. Step three is the technical analysis. Step four is where I execute my buy and sell orders. And then step five is where I analyze my trading metrics. All right, so let's go through each one of these steps. This is going to walk you through really kind of the way my day plays out. And we're going to start with AZTR today as we're going to use this as a case study to go kind of hand in hand with this class. All right, so let's see. So we'll put this on the side. So step one is finding that big percentage gainer. I don't make money buying and selling stocks that are break even. I make money when stocks are moving. So this morning, let's switch back to AZTR. First of all, I think it's worth noting that each morning when I sit down, I'll often ask this question of, did you eat well? Did you sleep well? What's the state of the overall market? And if the market is strong, you have stocks that you like, how are you going to adjust your risk for today? So for me, when I sat down, I was thinking just yesterday, we had a stock that went up 695%. The stock was MIRA, and I had a really solid green day on it, almost double my daily goal. This is the chart. So yesterday, MIRA goes from about 70 cents a share all the way up to $5.48. That was the high. What an incredible move. So because we just had that big move yesterday, I was expecting that there would be quite a lot of FOMO in the market, that traders would be getting really amped up, really excited, and that most likely people would be looking for the next stock that had the potential to make this kind of move. I mean, wouldn't you? Right? That's what we're looking for. So when I first sat down this morning, I was going through the scans, and I honestly didn't see a lot that looked great. SOAR was one of our leading gappers. It had made a move after hours of about 100% yesterday, but pre-market, it was already coming back down. So this is just looking at the 5-minute chart, and I could put the MACD on here, but certainly the MACD was negative. Even though I'm not trading on the 5-minute time frame, it's very clear that this is not something I'd be interested in trading. There were a couple other lower price stocks that were on the scans. Let's see. In fact, what was my first trade? Let me go back here. My first trade today was actually on WRNT. That's right. I forgot about that. So WRNT, look at this. I was happy to trade it this morning because right here where I got in, we were trading front side of the move, right? MACD is open. We could go back on the 1 minute, but it's going to be the same. It's going to be open on the 1 minute as well. So MACD was open. We're moving higher, and I was happy to trade it. But when it couldn't hold $1 a share, which is a critical level of psychological resistance for a lot of these stocks, at that point I said, all right, I've got to cut it loose. I've got to let it go. So ended up letting it go and only made actually on that first stock $217.16 right there. So it's like nothing particularly exciting, but hey, that breaks the ice. All right, so then my next trade, let's see, was I did get a trade on Mira today. I got a little bounce on that. And then I got another trade on another stock that was popping up. And let me pull up where I had my first trade on AZTR. So AZTR, I took my first trade on this at $2 this morning, a really solid initial entry. So AZTR, this stock hits my scanners. You see right now how this stock RGC is hitting the scanner at $32.44. So this scanner is searching the market in real time for stocks that are moving. And so this is how I'm finding the stock. So AZTR hits my scanner this morning, and it would have been basically the second that news came out, right down here, which was at about 8, I guess it was maybe 8:30 that the news came out, something like that. And then it kind of started creeping higher. And then right here, it punched higher from $1.70, $1.80, $1.90. And the MACD is moving. The volume is increasing. And I jumped in at $2. In fact, I saw one of our members, he's had a trade. He bought 1,000 shares at $2, and he was still holding that 1,000 shares when the price came up to $12 a share. I was like, that's unbelievable. So he had one entry and then, I don't know, one exit. That's not how I usually trade these. Usually the way I trade these is I jump in. I'm happy to take some profit if we get a squeeze up to 250 and 3, which I did right here. So I was up about $4,000 on this first trade. It pulls back. It comes back up, and I'm taking the next trade. And we'll talk about the actual execution of the trades in a second. But first, the way I found the stock. So I found the stock on my scanner, and as soon as I see a stock hitting my scan, I do my quick due diligence of whether or not this stock meets my criteria for being the type of stock I like trading. Now, I have another full-length episode on my stock selection process and how I qualify whether or not something is worth trading. But to give you the Cliff Notes version, I'm looking at a couple of key elements. I'll erase this. Okay, so number one, for stock selection, specifically on the scanners. All right, I'm going to switch pens. So number one, I know that I do better between 2 and 20 in terms of price. All right, so price of 2 and 20 is kind of my sweet spot where I find the most success. I know that the stock has to be up 10% already at a minimum. If it's not up at least 10%, then I won't even consider it. And I like to see that it has a relative volume. That one's, my goodness, relative volume of 5 times, which means the volume right now is 5 times higher than it would normally be at that time of the day on this stock. So the high, hang on one second. Hey, you go lay down. You go lay down. You go lay down. Hey, you go over here. You lay down. Sorry about that. So, anyways, so those who are familiar, that was not June. That was Bo. He's my other dog. Anyways, so stock scanners here. All right, so 2 and 20, up 10% on the day, relative volume of 5 times or higher. And then we've got float. Oh, actually, let's do news. I prefer to see if the stock has news, breaking news headline. And then number 5, I like to see the float is under 20 million shares. Generally speaking, if the float is higher than 20 million shares, I won't consider it. So these are the 5 criteria that I look at to evaluate whether or not a stock is worth trading. So this morning when AZTR hit my scanners, I was like, all right, price, a little cheaper, right? It's about $1.75, $1.80, but given that we've seen a lot of momentum on these lower price stocks in the last few trading sessions, I expected we would see momentum on this one again. And so, or this price range. So I was happy to trade it. Next check was a percentage change on the day. It was already up at least 10%. Check. Relative volume was next. And although I don't remember what the relative volume was, it was moving quickly. And that's what I liked seeing. I saw that there was a news headline, and I saw that the float, or the number of shares available to trade, was showing 640,000 shares according to our market data vendor right here. So based on all of that, this stock met my criteria for being worth trading. And that is really the extent of my process of deciding whether or not I'm going to take a trade. At least not whether or not I'm going to take a trade, but whether or not the stock is worthy of consideration. So that's step 1. And step 2 is where I check the news. And I did check the news headline. I saw we had fresh news on it this morning. And then step 3 is performing technical analysis. So when I'm performing technical analysis, the first thing I check, well, let me think about this for one quick second. So when I first pull up a chart, the very first thing I look at is this 1 minute time frame right here. So if I pull up this chart here, the very first thing I look at is right here. And in this case, we can see, all right, the price on this has kind of popped up. But what we would also be able to notice pretty quickly is that it's pretty light volume because there's a lot of candles that are just sideways. Sideways, 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 sideways. So a lot of kind of light volume candles where it's not really moving that much. You see that? I don't really love that. And then we push up there to 215. Now, if I'm okay with this, then from there, I look down here. And actually, the next thing I just noticed was China. Anytime I see a stock that is a Chinese company, sometimes it's obvious in the name. Other times I have to actually look at the headlines. I'm a little bit more skeptical because we've seen a lot of Chinese pump and dumps in the market. And although you can ride that wave of momentum, you have to be careful because you don't know when they're going to pull the rug. So then the next thing I do is I take a quick look at the daily chart. So here, what I'm looking at is the position of the 200 moving average. The 200 is at $1.50 here. So we're above the 200 moving average. And then I look to the left this way, and I look up to see where do we have nearby resistance. Maybe the top of that candle. And something that I do that's a little different from what other people do is if I mark the top of that candle, I'm not going to look at anything below it. Basically, I view this as casting a shadow back, and all of this area is disregarded. And the reason is because it's already broken through that price. It broke through it. Now, there are some exceptions to that, but this is a general rule of thumb that this this is a trigger at 230 that gives us room up to, well, we got to look to the left and up. So in this case, we've got some small little candles here, and then we have a bigger trigger maybe up in this area. That trigger at 354 gives us room to the left and up. And again, to better understand how to read candlestick charts, you could check out my episode on reading candlestick charts from zero, which goes into the daily charts, the shadow theory, and a number of other concepts. So on AZTR, when I first pull it up, that's the process. Basically, I check the 1 minute, it looks clean, and then I'm looking at the daily. And I'm seeing on the daily, the 200 moving average is way up here at 27 bucks. And I also notice it's a recent reverse split. You see that stock, that S? That means this was a stock split of 30-1 on July 1st. And that's why the float is so low, because the company recently did the stock split. So they've got a reverse stock split. I checked the stock, and you could pull up the headline, you could check the news, and you can also see where is it located. Branford, Connecticut. All right, so just east of New Haven. And you can see it's a early stage clinical biopharmaceutical company focused on developing therapies, precision dermatology, etc. So what we also know is that pharmaceutical stocks can be very hot. This is a sector that typically performs well. It's a U.S. company, which is going to be more trustworthy than a Chinese company, certainly. Not a guarantee that it's going to go up, but just noteworthy. And from that point, I'm thinking, all right, are there any levels on the daily recently that are a factor? And that's when I noticed something very interesting. Check this out. So I noticed that there is this gap right here. So back in February, the stock sold off this day and then gapped way down here and ended up going sideways. And the top of that gap was at about $8.85. It came back up to the top here. It tried here and tried here. And so what I realized was that if we break through $8.85, we have no resistance until $24.21, the bottom of this gap. This is called gap fill. Again, this is part of technical analysis and understanding how to read candlestick charts. So once I saw this, I was like, all right, that gets very exciting. But initially, when I was first trading it, I just saw this as basically having very light volume through this period. And because it has light volume, I didn't really think there would be a lot of bag holders. A bag holder is someone who does not have discipline in their trading. They take a position, the price drops, and they keep holding. Maybe they keep adding, they keep hoping it'll turn around, and they're just holding and holding and holding. The problem is when those traders are in a position for a long time, sometimes they'll just throw out a sell order at some optimistic price. They'll be like, oh, if I could just get out at $4, I'd be flat on this trade. So they put the sell order at $4. It's good till canceled, and it just sits there in the market. They might not even be full-time traders. They might be out running errands, whatever. And then the stock, boom, has news, pops up, and that order gets picked up. However, those orders are only live starting at 9:30 a.m. Good till cancel orders are 9:30 a.m. to 4 p.m. So any price action that occurs pre-market or after hours is going past above those orders, which is kind of crazy, but that's just the way it works. So I was concerned right at 9:30 at the opening bell that we could have some profit takers or bag holders sell. But given the recent daily chart on this with the light volume, I didn't think it was a very big risk. So now I've done my technical analysis on the daily chart. I've gotten kind of a good sense of how it looks. And I'm looking at the 1 minute chart for my first entry. And I'm actually going to pull up the 10-second chart. Remember, we've got a 30-minute window here. So once the price starts to pull away, we've got a window, and my goal is to lock up as much profit as I can on this stock and then stop trading it and look for the next one. So I'm not going to trade this one stock all day long. I'm going to trade it while the window's open, and then I'm going to look for the next one. So we get this initial pop-up right here, and that was the first trade. So do you see how we popped up, and we have a micro pullback right there? So now we're going to move into step 4, which is executing the trade. So step 4 is where I'm actually going to have my order entry window right here. So we'll type it in for AZTR, and I'm going to have my my window right here, just like that. So what I'm doing here is I click on the ask price, which right now is 542, and then I've got my shares right here, And now I'm ready to press the buy button. So I bought 2,500 shares with my first order and I filled it $2. And then I decided I wanted to add to the position. So I added at 201 and I added again at 212. All right, so now I've got an average of about 204 and we squeeze from 2 up to about 220. We drop down, we pop back up, we drop down, we pop back up, and then right here we break through this high. That's a breakout setup. So I ended up adding on this, let's see, at 225 for the breakthrough this level. Added at 225, we get squeezed up to 230. It pulls back, and as it breaks the high here, I'm adding again. Do you see how we're stair-stepping higher? We're stair-stepping higher. So I'm adding, we get the break higher. I'm adding, we get the break higher. And honestly, on this move right here, I thought we were going to go through $3, pull back, and we were just going to keep going. I was a little surprised it came all the way back down to 240 on higher volume selling. So that put me a little bit on notice there for a second. I was like, I don't know, this should have done a little bit better than that. So it ends up dipping down, kind of going sideways here, and then it rallies back up. This is a pattern that we call the cup and handle. So this is a cup formed by a double top. It's a U shape. And then the handle is sideways consolidation. And then that's where I'm taking that breakout trade there for the move up to 3. We go to 3, 310, 320, 340, 350, 360. Amazing. 20% in two 10-second candles, 20 seconds. Then we drop back down and then we pop back up to 380 and then we pull back. And then this is the area where it started to get interesting. We're sort of grinding here, right? And then we start to pull away, we squeeze up to 4. We push a little bit higher, we pull back, and then we pull away with a little bit more volume here, up to 440, 450, 460, up to 480. And so through this area, I'm just continuing to trade it. And I'm locking up profit. I'm buying on dips. I'm taking profit into the move higher. I'm buying on dips. I'm adding on the breakout. And I'm just actively trading it. This is also going to cross over a bit with the 1-minute scalping strategy that I've taught a number of classes on. So trading, this tight consolidation at this point stops getting interesting. I'm thinking this is going sideways here. Now it's time to wait. All right, so this is the spot where it's exciting, and this is where we start to slow down. Now, I use the 10-second chart because it's a good way for you to visualize what's happening on something that's moving very quickly. This is very fast action, and sometimes the 1 minute doesn't quite do it justice. So you could, if you wanted to, and you have 10-second charts, you could put the MACD on it, but it looks like you're getting some crossovers that are not actually helpful. So I don't do it, and it looks like it probably wouldn't be that great of an idea to keep it on there. So I keep it on the 1 minute chart, but I'm executing sometimes on the 10-second, especially when I'm studying level 2. So what I really need is I need my level 2, I need my time in sales, I've got my order entry window right here, and then of course I have my hotkeys. My hotkeys allow me to buy and sell just by pressing a button just like that. It's so fast. You can get in and out of the market lightning quick. Let's see. We have a test symbol, but that one's too expensive. Let's see. So I'll just do a trade on this. So I'm just going to do, let's see. I'll just put this up here, right here, so you can see this here for a second. All right. So I'm going to go shift 1 right there. And instantly, I'm in this with 250 shares. You see how it's instantaneous? Instantaneous. Now I put my order on the offer right here. I've got a sell order out, and I just filled at 41 for $2.50. It's just instant. These orders are so fast, and that's what I really like about this software. So you can see the trade there. I was in at 39, out at 40, and I did that just by pressing 2 buttons. So let me just grab something real quick for you to see. Okay, so this right here is my my spare keyboard, and you can see that some of these keys are a little worn out. So Control X is to sell a quarter position. Control C. Control X is sell half. Control Z is sell full. Control K, Control L, these are selling on the ask, which add liquidity. Shift 1, Shift 2, Shift 3, these are hotkeys for buying on the ask. So as quickly as I'm typing. I could type AZTR and then I could type shift one, shift one, shift one. I'm in, 3,000 shares, whatever. And then control K, I've got half on the ask. Control Q, cancel the order. Control X, sell half on the bid. Shift one, add back 1,000. Control K, sell on the ask. Control P, 10-cent profit target. Control B, stop at break even. Control X, sell half. Control Z, sell the rest, right? Control Q, cancel any open orders. And it's that fluid. Now, the reason I trade with this or with a trackpad here is because of how tight this has to be. Everything here has to be really tight. I don't want to reach for a mouse. I want to be able to move really quickly. So quickly move my mouse from the buy button to the sell button if I'm entering using the order entry window. And I will use this order entry window from time to time. If I have time, I will enter it. Here. The reason I like this is because I could say, I want to get in at, I could type my shares, whatever. I want to get in at 41 or 40, and I click that buy button, and my order is just going to sit there. It's just going to sit there and wait. I'm waiting and waiting and waiting. So I just have to wait. Now, if I get filled, I get filled. If I don't get filled, I don't get filled. I sit there and wait. So then I'll cancel my order, right? So if you just press the hotkey of shift one, you'll fill pretty much no matter what, because of the way the order is scripted to buy at the ask plus 10 cents. That's okay for a fast moving stock, but you just got to be careful, if you've got a big spread on something. So, all right, so let's back up out of this for 1 second, and we'll pull the slides back up. So step 4 is executing the trade. And on AZTR, I had I just traded the whole way up. But what you would see when you look at those trades is that the area where I traded it was very aggressively front side here, MACD open, stopped trading it. Very aggressively right here, stopped trading it. And I'm looking for something else. And I think what a lot of people get sucked into is just continuing to trade the same stock again and again and again, and they end up over trading the backside of the move. And I said, you know what I'd be better off doing is leaving this alone and waiting for the next one. And next thing you know, SLRX is squeezing up. And at 10:30, when AZRT or whatever was going sideways, this one starts pulling away and goes from $2 to $7. So doesn't it make more sense to just focus on trading the front side of whatever's currently squeezing than to just get so fixated on trading the same stock all day long? That's what I think is better. So that's the way I approach it. So at that point, I stopped trading AZTR completely, and I think I was up 32,000 on the day at that point. I was up 32,000 on the day when I stopped trading AZTR. So, hey, still a really good day, but I was like, I don't need to give back profit on AZTR, so let me look for something else to trade. I traded aggressively. I took, so you can see I traded 277,000 shares. So this would have been, so today I would have had probably 20 trades, 30 trades with 5,000 to 10,000 shares and a couple that were bigger. You just keep doing that as the move goes higher and you're going to churn your shares. It's fine. It's not like it's one entry, one exit. It's just total trading. But then I said, all right, I'm going to look for the next one. And then we got SLRX, we got EFSH, we got ADIL, PGHL, right? So PGHL, this was another one. We got a nice front side of the move on this right through here. This actually IPO'd today. Then it went from $4 up to 10. But on this one, here's something that's interesting. By the time the MACD crossed over, it had already gone from 450 up to 10, but you didn't get the crossover until it was back at 6. So if you waited for the crossover to exit, you would have held too long. So I don't wait for the crossover to exit, but once we have the crossover, I don't want to trade it anymore. So I want to trade on the front side as it's moving up. I don't want to take profit as it's squeezing up, and then let it dip down and then look for that next dip for the next trade. Now this chart is very hard to trade, which is why I really didn't make that much money on it. I'm up, $1,600. It was a small winner in total. And that's fine. There was another one today, RGC, which is currently up 430%. This one was up 600 for a moment. Also basically impossible to trade. Volume is too light. It's just not easy to trade. CJET right now hitting the scans. So this one dropped earlier, came back up to 450 to 5. Let's see where it's located. CJet, so Grand Cayman, Chijet, I don't know. Motor Company, never heard of them. 2001, based in Grand Cayman. So it's based in Grand Cayman, but that doesn't look like the name of someone who's based in Grand Cayman. So, a lot of these companies where they're actually located, where the company's registered is different than where they do their business. Let's see. Oh, this was a SPAC, special acquisition company, into a merger. Okay. China. People's Republic of China. So for that reason, this is one that I probably wouldn't trust, unfortunately. Just we know the game. And if you haven't checked out my episode on these Chinese stocks, I've got another pretty interesting episode on that. But yeah, so step 4 is to execute the trades. And the way that I'm going to focus on trading these is buying the pullbacks. So if you haven't checked out the episode on the 1-minute scalping strategy or buying those pullbacks, definitely check that out. There's also some details on this strategy in my small account strategy PDF, which is linked down in the bottom in the comments and in the description. And then step 5 is when we get into analytics. So it's very important that you review your progress. So right here, I have these analytics where I can actually track. This is $12.8 million of gross profit. I'll remind you right now, my results are not typical. There's no guarantee you'll find a similar result as me, so please take it slow. But 12.8 million here in gross profit. And so what I could do is I can analyze my trades based on the time of day, based on the day of the week, based on the price of the stock. And all of this is super, super valuable information as you're trying to figure out what in your strategy is working. So today, I import my trades at the end of the day. Actually, it's the next day that I can import them. So I can't import these right now. I'll have to wait till tomorrow. But I'll be interested to see what my metrics look like for today. My guess is that I have pretty good accuracy, probably above 70%. I'm green on all the stocks I traded. My profit loss ratio is probably pretty solid. I had a couple of losses, but they weren't that big, and I had some really nice big winners. So positive profit loss ratio, these are the things that we kind of pay attention to when we're looking at metrics. We want to look at your profit loss ratio. You want to look at your accuracy. You want to look at your hold time. And you want to be able to look at this both for winners and losers. So what's your average hold time for winners? What's the average hold time for losers? Profit loss ratio percentage. And then price, where you've done best, volume, and then other metrics that kind of play into what we already know about stock selection. Because ultimately, your metrics are going to help reaffirm for you what is working in your trading. So if these are your metrics, well, I'm going to use an example here. I'm going to go to a month where I didn't do so well. So let's look custom range at March. All right, so this was not a great month for me. It's a little embarrassing. I don't even want to show it to you, but I will. So finished month of March with $20,000, but you could see I lost money on stocks over 20. I had this little window where I did well, and then everything else was sort of poor. And if we look at performance by time of day, you'll also see that I didn't do well on Monday and Tuesday, and I also didn't do well early, and I didn't do well late. I did well kind of in the middle of my window. And so what I decided to do then was after that performance, I was like, you know what, for April, I need to do better. I'm going to take my metrics and I'm going to learn from them. And so in April, I focused on trading during the time when I usually do better. I did still lose a little bit towards the end of the day, but not as bad. And then I focused on trading in the price range where I had done well in the previous month, because I said, right now, I need to go back to basics and focus on what I know is working. I want to really encourage you guys to do that. Focus on what you know is working. Focus on the right stocks to trade. We had some great ones today. I bet we're going to have some more really good ones in the coming weeks, the coming months. So for those of you guys tuning in, I hope you found this episode super valuable. I hope you hit that thumbs up. I hope you subscribe to the channel. And hey, if you want to check out a 2-week trial at Warrior Trading, there'll be a link posted in the comments and in the top of the description. And I also have the link where you can download my small account PDF. So check those things out. And I want to thank you as always for tuning in. And you know what? The recommended reading, I didn't quite get to it. So what I'll do is I'll put a video right here of my recommended reading list. So check that out, and I'll see you guys for the next episode real soon.